Hello and welcome. You're tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me as always is Shell D'Souza. And viewers, this is a show where you get answers for all your stock-related queries. In a short while from now, we will connect with our experts and try to take as many queries as possible. But before that, let's have a quick look what the markets are up to. Cheryl, not much action on the benchmark indices, but indeed a lot of stock-specific action.
Absolutely. Very good morning to you, Shrishti. And if you look at the markets, yes, doing absolutely nothing in trade today. Yes, it is in the positive territory, no doubt. But it is pretty flat. The move has not been that much of a difference of what we saw actually yesterday. So it's a range-bound trading session for the markets as of now, as you can see it on your screen. At least that's what the benchmark indices are doing. And Nifty Bank is actually, in all sense, doing absolutely nothing because it is trading flat with a positive bias as we speak. Talking about the advanced decline ratio, very much tilted in the favor of the gainers, but it's just initial hours of the trading session. You have a sizable amount of stocks that are in the negative territory as well. Talking about the way how the markets are panning out, or the stocks that are actually gaining on the Nifty today, the top gainer, surprise, surprise, is Asian Paints. It's been a while that we've seen that particular counter see a sharp up move. 2.5% uptick coming in for Asian Paints, top gainer on the Nifty today, followed by JSW Steel, Adani Ports. You have NTPC, Sun Pharma that are gaining in trade today. While on the flip side is Divi's Laboratories down 1.8%, Tata Consumer reacting to its numbers down 1.3%. You have IndusInd Bank, Axis Bank as well as Power Grid that are taking a bit easy in trade. Let's then zoom in and try and understand what's exactly happening when you talk about the sectoral indices. Realty Index and PSU Bank Index are the only ones in the negative territory, with the Realty Index being among the top sectoral loser, while on the flip side it is Pharma, Metals, Oil and Gas that are declining, with the broader markets outperforming the benchmark indices. So that's the way how the markets are looking like at this point in time actually, Shrishti. Pretty flat, like the way you said, doing absolutely nothing.
All right, that's the action that we are seeing. Let's see how the excitement builds in. But indeed, a lot of exciting counters in the broader market space. But with this, viewers, let's move on and let's kickstart taking all your stock-related queries on the show with our experts. And just to note that you can connect with us live on a WhatsApp number that will be flashing throughout the show on the top of a screen, as well as you can also write to us on our social media pages, that is X as well as Facebook pages, and we'll try to take as many queries as possible. Let's start then, and before that, let me welcome two of our very special guests. Saurabh Jain, Assistant Vice President, Research at SMC Global, is live with us right now. And in a short while from now, our technical expert will also join us. But very good morning, Saurabh. Thank you so much for your time. Let me just kickstart asking you the first query that I have. And this one is coming in from Krishna. His query is on IDFC First Bank. He's holding 100 shares. Buy price is 48 rupees. He's saying that it's in a very narrow range for a long time now. But in the medium term, what sort of a targets to expect?
Good morning, Sushi. Thanks for having me on the show. See, he has chosen a good bank. I mean, we are quite bullish on the banking pack, and among the banking, IDFC Bank is good on the. If you look at on the operational metrics, the bank got re-rated a year ago, and then we saw some kind of a consolidation. If you look at the bank's balance sheet, it is quite good. The banks has doubled its branches, and now they are coming up with the slew of offers to have more customer on the board. I think from the 3 years perspective, it is a good stock to hold. So my take would be stick to it, stick to your investment.
All right, so that's the word coming in from Saurabh. A very good morning to you, Saurabh. And on the technicals now, we also have Hemen Kapadia joining us. A very good morning to you as well, Hemen. And let me take the next query that's coming in. And this one is from Veni, who is a senior citizen, writing to us from Hyderabad, wants to know about defense counters, wants to also invest a sizable amount of about 5 lakhs in counters like HAL, BEL and BHEL. Which out of these two stocks are good stocks to look at right now, Hemen, and which one should he go ahead and park his money in?
A very good morning to you, Shell. Thank you for having me on the show. I think all the stocks that he mentioned are good. Not only good, they're great. But the thing is, all of them have moved significantly. So I am not sure. I suggest he spread it. And I would suggest that not invest everything at one go, even the stock. So maybe buy half now and keep some liquidity on the downside. So all the three look great. And I think all of the three can be partially invested in at current levels.
On to the next query, and this one is coming in from Bhardwaj. And Saurabh wants to know, can he go ahead and buy Indian Hotel at current market price, looking it to hold for the next 2 to 4 years, and any targets that you have in this one, please do share.
See, all the hotel stocks got re-rated in the last 2 3 years. The numbers they are clocking in, I mean, they are stupendous. The last quarter was not as good because of the elections, but I feel that the going forward next 3 quarters will be good. The company has guided for higher average revenue per room rent, and surely they will clock in good profits going next year also. The valuations are on the higher side, but since he has long-term horizon 2 to 4 years, I think best strategy would be to accumulate in a staggered manner. Don't buy at a one go. Maybe market corrections will offer good opportunities at a lower level. So start taking in and buy in staggered manners.
All right, the next one is coming in from Satya and for you, Hemen. He wants to know about Ramki Infra. He wants to know whether he can add some more of this counter in portfolio for a period of 1 to 2 years for an upside of about 30%. Now, I don't know whether he's already invested in this counter and therefore he's looking to add on some more in his portfolio, or in case that's the case, or if he wants to go ahead and allocate fresh money into Ramki Infra. Do you think it's a good bet?
Well, technical parameters, we are in an intermediate uptrend. The bigger picture is improving. I'd say buy on declines, 700, 620 channel.
All right. The next query, is coming in on Coal India. Actually, this one is from Mohit, holding 500 shares. Buy price is 152 rupees. Already sitting at great profits, but his time horizon is for the next 2 years. So, what to do next?
Very good morning, Srishti.
Good morning.
I think he can hold. I think most of these stocks are in established and mature uptrends. That picture hasn't changed even as far as coal. Currently, a 5-month consolidation breakout coming. So I'd say hold. Maybe if he wants to book some partial profit, but otherwise the setup remains positive.
Okay, this one is from Richie, who's writing to us from Andhra Pradesh, and he wants to know once again, Hemen, at what price should he look to enter Sun Pharma and NHPC for a period of about 1 year or so?
I will play it safe, Cheryl. Buy half in Sun Pharma at current levels. Overheated market, maybe it comes off, then he adds more. Long-term uptrend very much in place. NHPC has been consolidating for 5-6 months now, so this is the easier one. So I'd say 105 is current level. That's where he can invest partially, and around 90-92 is a second tranche where he can invest in from a 1 year point of view.
All right. Saurabh, the next query is coming from K. Anand from Hyderabad. I guess he's writing to us for the first time. He's holding 130 shares of Fusion Finance. His buy price is 474 rupees. We don't discuss much about this particular stock, and it's been almost like 2 years that the stock is listed on the bourses. Saurabh, do you track this one, and will you be able to guide him?
I'm sorry, Srishti, I haven't tracked this stock.
Guess so. But Hemen, just looking at the charts, do you believe that this can once again come back to his buy price, 474 rupees? Any guidance that you can help him with?
Little bit of positive data, Srishti, but whatever data we have seems to suggest we are in a lower top, lower bottom scenario. We are in an intermediate downtrend, support at 420. So nothing very exciting over here. We need a closing above 480 for a weekly revival. So frankly speaking, currently it's intermediate downtrend and not looking very pleasant.
All right, this next one is coming in from a viewer Balakrishnan, who's writing to us from Chennai, and Saurabh, this one is for you. He wants to know, between Natco Pharma and Zydus Life, which one is a better bet that he can look to buy at current price for the longer term? He wants to understand the fundamentals of both of these counters, and which one do you think is a better bet when you talk about the mid-cap pharma space?
I think both companies are equally good. I mean, the numbers are improving and the growth prospects look quite optimistic. But out of the two, if one has to choose one, I will suggest go for Natco Pharma. I think you can easily make 30, 40, 50% kind of a return if you invest for more than 1 year.
All right. The next query that I have is coming in from Sonu, and this query is for you, Saurabh. His query is it okay to invest in housing stocks like LIC Housing for the next 2 to 3 years, or rather PNB Housing, Canfin Homes, any stock that you like at this price point where he can invest afresh for the next 2 to 3 years?
Well, it is good to invest in the housing finance as we are seeing good amount of interest coming in the housing market. The government focus is also there, but in view of if the economic grows in whole perspective, then I think it would be great to invest in the banking stock, because then you'll be getting benefit of the growth that is coming from every sphere, from the industry side, from the government spending, infrastructure and all. So in that sense, I would rather recommend to go for a bigger bank name like ICICI.
All right, this one is coming in from Kiran, who's writing to us with Pune. He wants to know the entry price for Inox Wind as well as JSW Energy. He wants to remain invested in both of these counters for a period of 9 to 12 months. Also, does it make sense to invest in both of them actually, Hemen, or should he look at either of them, Inox Wind as well as JSW Energy?
Inox Wind is comfortably placed, looks good, so I'd say you can go for it. I just check out JSW Energy. We've had a run up. We are in a 1.5 to 2 year uptrend, but it's still intact. So I would prefer Inox. It looks relatively technically undervalued, Cheryl.
All right, then that's the take coming in on Inox Wind. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back to take more of your stock-related queries.
Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Then we have today our experts, Hemen Kapadia as well as Saurabh Jain, to take all of your queries. We've already done with almost 9 queries. Here's the 10th query coming in for you, gentlemen. This one is coming from Sudha Nair, who's writing to us. And Sudha wants to know about GAIL. She has about 3,000 shares at a price of 110 rupees per share. Should she hold our book profits at current levels? Let me take this to you, Saurabh, because GAIL is in news today, seeing a sharp up move as well. A short while ago, there was a con call also by the management on the numbers. But what's your take on GAIL? She's making good set of profits. Stay put with this one.
Would all the segment posted good set of numbers except Petcap. The stock has seen good amount of movement because of the results only. It came above the market expectation. I think partial profit taking can be done.
All right, then that's the view coming in on GAIL. But moving on, and Hemen, what's your view on ABFRL? The stock has been showing decent moves today. Pradeep from Kolkata is already holding 50 shares. His buy price is 340 rupees. What to do in this one? He wants to stay invested for a long term, and any targets to look out for?
Everything is hunky-dory, Shishri. Only thing is moved up of 5 months in a row. All-time high is 360, where we'll see resistance. So keeping in mind a slightly longer term view, one can expect a price of 450 minimum. I'd see 520 in the next 18 to 24 months, Shishri.
Right, so that's the view coming in on ABFRL. Then let's talk about the query coming in from Kavita, who wants to know about IDFC First Bank. She purchased at a level of about 89 rupees per share. Hemen, she wants to know what should she do with the stock. She's saying she can hold for some more time, but does it make sense, or should she go ahead and book loss in this one?
I think it's a hold. 9 months of doing nothing. A close above 85 should improve. So if it's a very short term view, it's a sell on bounce. If it's a slightly medium to longer term view, I think it's a hold. A breakout would be quite rewarding.
All right, then. Moving on to the next query then, and the next query, Hemen, let me once again take it from you, because this one is from Jonna from Hyderabad, wants an outlook on 2 counters. Firstly is Page Industries. She is holding 6 shares. Buy price is 40,200 rupees for the 6 shares she is holding. And the other one is 1,000 shares of Campus purchased at a price of 323 rupees. What to do in both of these names?
Page looks very nice news for her. The setup is improving. We've been sideways for almost 1.5 years. Strong resistance at 43,000, which I believe will be taken out. Strong hold. I think further upside seems like a distinct possibility once 43 is taken out. Campus has been a little bit of a disappointment, but we've seen a 10-week consolidation breakout, hold. Finally, a further upside seems to be on the corner.
Let me take this one from Prashant. He's writing to us from Mumbai, and there are a couple of stocks that he wants to know about. One is Triveni Engineering. He has about 100 shares at a price of 307 rupees per share, Saurabh. And the other one is KPIT, 15 shares at a price of 839 rupees per share. Should he continue to hold on to these counters, look to add some more? What sort of strategy should he use with Triveni as well as KPIT? Because I believe he's making profits in both.
And the prospects are even great. KPIT is in specialty domain. It's largely into IT, but into specific area which is showing good amount of strength. So I feel these both the stocks he can hold.
All right. Hemen, the next query is from Neelam, wants a short to medium term view and targets on Swan Energy as well as HDFC Life. In both of these, she's actually making 15 to 18% profits. Holding period is for the next 1 to 3 months.
I'd say hold on Swan. The only risk is the market risk. Weekly close above 760 should take it to 810, 820. Setup remains positive. HDFC Life F&O stock, so one would expect a lot of volatility in things, but setup is positive. We are breaking out of 710. I'd say a hold, keep a protect profit at 690, but slightly longer term view, I'd say 800 coming.
Okay, this one is coming in from Netik. He's writing to us from Kanpur, and he has a query on a couple of stocks. He wants to know about ITC, Tata Motors, DVR. Does it make sense to go ahead and enter these counters at current levels? And he also wants to know about Suzlon, NTPC, NHPC, but I'll leave that for some other day. What's your take coming in on ITC, Tata Motors, DVR? Saurabh, what's your take coming in both of these counters? I'm not sure, does it make sense to now invest in Tata Motors, DVR, given that scheme of arrangement that it has with Tata Motors?
See, if you look at the Tata Motor, both the companies he can invest for the long term. And apart from that, he has asked about NTPC, NHPC. The utility space is also looking good to us, and we feel that there is a good amount of growth which can be seen in the next 2-3 years. So all the stocks he has talked about, he can buy them in staggered manner.
See, you missed that. Did you talk about ITC as well? What should he do with that? Should he enter?
Yeah, a small demerger will go from here onwards. 40% of the hotel business will get demerged, but the prospects are quite good. ITC can be a good bet for the long.
All right. Hemen, the next query is coming from Gautam from Mumbai, and his query is it the right time to buy either Adani Ports or ABSL AMC for the next 12 to 18 months?
I'd say Adani Ports is the easier one because I have a little bit of paucity of data as far as ABSL AMC is concerned. Adani Ports, I don't have that problem. We have decent listed history. We're at currently around 1570 or so, Srishti. I'm looking at 2000 in the next 18 months or so.
Okay, this was from Mahalakshmi. This one also is for you, Hemen. She wants to know about Bank of Baroda. She's holding about 1,000 shares of this counter at a price of 278 rupees per share. She bought this a month ago. She wants to know if she is going to hold for another 2 to 3 months. Is there any scope for her to recover her losses in Bank of Baroda? And also any other good stock that she can look to go ahead and recover the loss if you do not advise her to stay put with Bank of Baroda?
Frankly speaking, the NSE PSU Bank Index schedule is looking good. It's just that Can Bank and Bank of Baroda have moved significantly. They walked into a correction of a greater degree. Bank of Baroda corrected for 6 months. Once again, her time frame is a bit jarring. If it was a slightly longer term time frame, I'd say clear hold. Maybe what she can do is she can exit Bank of Baroda and buy a Bank of Maharashtra or a central bank. They are looking good, and the way the the NSE PSU Bank Index is poised, I believe that will surprise. So maybe she can shift from Bank of Baroda to one of these PSU banks.
All right. Hemen, I beg your pardon. Saurabh, I'm coming to you for the next query, and this one is from T.N. Rao from Hyderabad, and he's holding 2 stocks, and what a wealth creation that he has experienced over the years, because first stock is Kaplan Points. He's bought 200 shares, buy price is just 49 rupees, and now if you'll see, the stock is trading over 1500 rupees. So what a move over there. And he also captured great moves on Trent as well. He's holding 25 shares, buy price is just 900 rupees, and we have witnessed what kind of a multi-bagger Trent has been. What to do now, Saurabh, in both of these after the phenomenal run-up? Do you believe that the valuations at this point are justified, overstretched, and he should move out or continue to hold on?
See, I feel the only concern is the valuation only. And if you look at the operational matrix, there is no problem. If you look at the trend or Kaplan point in the trend, you are saying Zydus is gearing up well for the company, and they are coming with the new formats also, new ventures also, which are likely to likely to see good amount of growth coming in. So they are the unique business model they are running in very fantastically. In the Kaplan point also, the numbers are quite good. The concern is the valuation only. I think partial profit taking will be a good idea.
All right, so that's the take coming in on Kaplan Point, where there are a lot of stock queries left to be answered, and we'll be back right after the short break. Welcome back. You're watching Buy Now, Sell Now on ET Now, and let's continue taking all of the stock-related queries. On to our 19th query then, and this one is coming from Shankar. He's writing to us from Tuticorin. He wants to know about HDFC, IDFC, and Zomato. He's been holding for all these counters for the last 1 year, Saurabh, but he wants to actually go ahead and allocate fresh funds, and a sizable amount of funds actually for the next 8 to 12 months. Any value stock that you can see in a shorter time frame that he can look to invest in right now?
See, in the banking space, I like ICICI Bank. In the pharma space, I like Natco Pharma, the stock we have talked about in the show also. And a smaller name which is coming to my mind in the pharma space is the Morpan Laboratories. Apart from that, I feel that he can also go with some infrastructure stocks like Vishnu Prakash.
All right, a lot of stock actually picks coming in from Saurabh over there. But this one is coming to you, Hemen, from Mika. She's writing to us from UAE and regular viewer of ours actually from overseas. She wants to know about Titagarh Rail Wagon. She has 18 shares at a price of 1,671 rupees per share. That's the average buy price for her. What good level, or what are the good levels that you think that she can look to average this counter? Does it make sense to go ahead and average Titagarh Rail right now?
Well, it is slightly mixed view. The setup is positive, but we are sitting on top of a move from 50 to 900 over the last 3.5 years or so. We are susceptible to a correction of a greater degree. Right now, it's a short-term correction. So I would say yes, but go slow. Buy it in bits and pieces, not one go. Levels to add: 1450, 1350, 1250.
Once again, actually, this one is coming from Dipesh. He wants to know about Lloyd Engineering. I don't know if you track this one. He's bought it. Okay, he's not mentioned Lloyd Engineering buy price. He in fact mentioned buy price for IRFC, which is purchased at 204, and Geo Finance at a price of 335 rupees per share. For the next 2 to 3 months, makes sense to stay put with both of these?
Okay, Lloyd, yes. IRFC, yes. And Geo, I would suggest if you can extend the holding period a bit.
Query is coming from Vara Prasad, who's writing to us from Hyderabad. The long-term investor, actually, Saurabh, TTK Prestige is the counter that he has a query on. 214 shares at a price of 930 rupees per share. That's the average price. For the last 2 years, he's holding onto the counter, making mild set of profits. But do you actually now advise for him to take a switch from TTK Prestige, look at some other counters altogether? And if so, which are the counters that you think make sense from TTK Prestige to take a switch?
I think the company is in the cyclical business, and usually the Diwali season, the second half of the season comes good for in terms of revenues and profitability. So I would rather suggest him to stick around for another 5 months, 5-6 months, and in my opinion, he should surely be making some money. So my take will be good.
All right, this one's coming from Krishna, who's writing to us from Bangalore. He has a fundamental query actually, and he wants to know whether it makes sense to go ahead and buy Mankind Pharma right now, Saurabh, this after the acquisition of Bharat Serum. What's your take on that, as well as can he look to enter Borosil Renewables?
I think after the duty cut in the for the it came good for the company Borosil Renewable, and we saw some kind of a buying activity in buying in the stock also, because it can really boost the company's margin. Earlier they were finding very difficult to, after the good amount of utilization rate at their factory gates, the products were even dearer than the imported ones. So the cut came good. The other stock, can you please repeat the name?
Was Mankind Pharma and Borosil Renewables.
The first stock?
First was Mankind Pharma if for the
Yeah.
acquisition of
Some,
Bharat Serum, and the other
see,
one was Borosil Renewables. Yeah.
Mankind Pharma looks very good to me. They have made a good amount of traction in all of their therapeutic areas, and after this acquisition, some kind of a loan would come into the balance sheet, but they are cash rich, and apart from that, some investors are also coming on the board. From the long term perspective, I think Mankind Pharma makes sense. It is good to hold.
This one is coming from Rajesh Maheshwari. Let me take it to you, Hemen. Deepak Nitrite is a counter, 50 shares at an average price of 2,000 rupees per share. He wants to know what should he do with this counter in the short term. Does it make sense to stay invested or look to exit? He's making good set of profits, excess of 1,000 rupees per share is the profit that he's making in Deepak Nitrite. What's your take?
Hold with a protect profit at 3020. If that breaks in terms of closing exit, and short term view, so I won't say more, but is heading towards 3,500 in the medium term.
Just before I proceed with the rest of the queries, a quick note for all of our viewers that in a short while from now, we will have Kunal who will come up and explain to us what exactly the SEBI consultation paper on F&O means. He will actually take us through and break it down for each of us. What are the proposals and what are the proposals likely to be aimed at? So stay tuned for that sort of an exhaustive explainer coming in from Kunal Botha right after we take all the queries. So now let me get back to taking the queries then. And this one is coming in from Sundar, who is a senior citizen. He has Kitex Limited, Kitex Garments, that is 500 shares at a price of 170 rupees per share. Holding on to this for the last 2 years actually. Saurabh, what's your take? Should he look to continue to hold on to this or look to book profits now? Fundamentally, stronger play?
The textile sector is looking good to me. The cotton price is not an issue right now. The way it was in last year, I think the margin expansion and the growth will come going forward. So in that sense, I think it is a hold.
All right, this one is coming from Ajay, who is writing to us from Hyderabad. He wants to know about Pesalo Digital. Should he look to buy some more or not? Hemen, his buy price is 60 rupees, 68 rupees per share. Have you tracked this one?
No, but I just looked at it, Cheryl. Intermediate correction, the setup seems positive. It's going to take some time. He has the patience and he needs to wait for it to take out 86 on the weekly chart, support at 60.
From Alok Mangla, and Alok has a query on IDFC First Bank. Alok, we've already taken IDFC First Bank earlier in the show, almost 2 queries on that counter. So once the show is uploaded, you can catch that view coming in from Hemen. And the other one is on Exide Industries, actually, Hemen. 10,000 shares of Exide buy price is about 525 rupees per share. What's the potential target that you're seeing for Exide Industries? Remember that this particular counter came out with its earnings yesterday. But on the charts, what sort of a target are you seeing for this one?
We seem to be on the cusp of entering a corrective phase. Close below 520 would mean further downside. So I suggest instead of the target, we need to see where it stops at. So it's going to take some time. He'll have to be a bit patient. I believe intermediate correction is in the offing, Cheryl.
That's the take coming in on Exide Industries. On that note, let's slip into a break. And remember, viewers, when we come back, we'll have an explainer coming in from Kunal Botha to break it down for you what the SEBI consultation paper on F&O means. So don't go anywhere and stay tuned. We'll take more queries as well. Welcome back. You're watching Buy Now, Sell Now and ET Now. Let's continue taking your queries then. And this one is coming from Namita for you, Hemen. Yes Bank and South Indian Bank. Does it make sense to enter these counters right now on the technicals? How are the charts looking for both of them?
The past history has not been very conducive for Yes Bank, but yeah, pure technicals, not an exact rounding bottom, a consolidation phase is on about 28.5, looking good. I'd say once again with a little bit of pinch of salt, looks good. Further upside expected for 26.80. South Indian Bank is in an intermediate correction. It's had a run up. The long-term picture is a bit wobbly. On pure charts, Yes Bank looks better.
All right, with that, let's kickstart taking all of your query in the rapid fire then. And this one is coming from Ashish from Pune. This one is for you, Saurabh. Wants to know about Equitas Small Finance Bank. 75 rupees is the buy price. What's the sort of strategy makes sense to accumulate right now?
I think it is better to get out of it.
All right, this one is coming from Vidya, who's a short-term trader. For you, actually, Hemen, Tata Communications, average price 1,850 rupees per share. Good profits, time to book profits, but
only partial, hold for the rest.
All right, this one is coming from Srinu, who's writing to us from Vijayawada, wants a short-term call on, taking a short-term call on Lloyds Engineering. 90 shares at a, 90 is the buy price, 450 is the shares. Hemen, what to do, hold or exit?
Hold.
All right, this one is coming in from our viewer George from Kochi. Wants to know about J Kumar Infra, actually, Saurabh. 200 shares at a price of 909 rupees per share is a recent buy. Does it make sense to stay put for the longer term?
I think valuation is on the expensive side. I think it is better to exit.
All right. This next one is coming in from one of our viewers who's not mentioned name, wants to know about RBL Bank. Is it attractive? Is it a buy right now? What's your take coming in on this one, Saurabh?
I think better give a miss and go for ICICI.
All right. This next query that I have is coming in from Ramamurthy from Bahrain. Wants to know about Titan and Petronet LNG. Good time to buy for a period of 2 years, Hemen?
Petronet LNG, yes. Titan partially.
All right, that's the take coming in on Titan and Petronet LNG. This one is from Sarita. Wants to know about Birlasoft. 460 is the buy price. Holding for over a year. What's the 3 to 6 months target coming in for Birlasoft, Hemen?
3 to 6 months target, 760.
All right, 760 is the target for that one. This one is coming for our viewer Jay Ramaraju. Wants to know about All Cargo. 800 shares at a price of around 61.5 rupees per share. Hold or sell. What's your take coming in for this one, Saurabh?
Hold for a period of 1 year.
All right, and with that we come to the end of the queries as well as all the rapid fire as well. So thank you so much, Saurabh, as well as Hemen, for taking our viewer queries as well as resolving them. Thank you so much for joining us on the show. And viewers, as promised, we now have Kunal Bothra in the studios with us to talk exactly about what that SEBI consultation paper was all about. Why was it firstly, why did the SEBI come out with it? Firstly, and what does it mean? So firstly, Kunal, let me ask you about the question. Why do you think that this consultation paper has come about? We've heard a lot of commentary talking about what is exactly happening in the F&O market. There's a frenzy, is what they're saying. We've also had commentaries from Finance Minister, Finance Secretary as well, isn't it?
Absolutely, Cheryl. And you know, so I read the entire consultation paper, and the outcome which has come out from the consultation paper is very important. And there's one word which is very important, which is speculative hyperactivity. Okay. So the entire measure which we'll be discussing is that to how to curb and curtail the speculative hyperactivity which is going on in the index options front. So we look at few of the slides now. The first one, for example, the thesis of the entire report is that there's been a major rise in the F&O trading which has happened over the last 6 to 7 years. So from FY 2018, the index options turnover was just about 4.5, and that's risen up to almost 138. So you can see that this is a 30x jump in the index options turnover itself, even though the index has moved from 10,000 levels to 24,000 odd mark, which is a 2x jump in the index. This compared to the stock options, the stock futures, the index futures, the jump over here is exponentially high, and that's generally indicated that there's been more speculative hyperactivity, and that's the word which the SEBI consultation paper has mentioned a couple of times. Now, what are the proposals which have been at play in the consultation paper? The first and the most important is rationalization of strike prices for options. Now, what earlier used to happen is that there were 35 strikes at the above in the money as well as out of the money for Nifty, and 45 strikes plus minus for Bank Nifty. Now, this generally indicated that there's been more illiquid strikes, because when you go beyond a certain strike price, like a 4%, 5% range, those strikes, they actually become illiquid, and that's why there is no reason for having those illiquid strikes. So the proposal is now to curtail this to almost 50 strikes, or not more than 50 strikes for any given individual contract. And this could probably also curtail that the range which was 7% to 8% earlier will now get curtailed to 4% broadly for the index. So both on the Nifty as well as on the Bank Nifty. Then the second and the most important part is upfront collections of options premium. So for traders who've been trading into F&O side, they already know that options, the premium was getting collected on the futures side, or as well as the margin was getting collected on the futures as well as on the sell side of the options. But for the options premium, there was no stipulation as such to try and collect the entire premium. But now the consultation paper says that the aim is to try and go for a classic stipulation where you collect the options premium even on the buying side of options. The third, again, an interesting strategy, because I believe not many people know that there has been a calendar spread benefit which happens. So when there is a there's an offsetting strategy which is there when you have a calendar position strategy. Now that offsetting because of the calendar spread or the margin requirements, which is generally very lower when you try and have a calendar spread, that drops down. So rather than having a normal margin requirement for 2 positions, and that too when you're rolling it over to the away series, so which means 3 expiries beyond the current series, the liquidity parameters are very low, and I think that generally indicates that the calendar spread strategy has low margin requirements, which should not be the case, because as and how you go away into the expiries, the risk and the volatility increases. So that's why to curb this liquidity risk, they've indicated to try and remove this calendar spread strategy. Intraday monitoring of position limits. This is again very important, because earlier the current practice was that the limits were monitored during by the end of the day. Now there is going to be intraday monitoring. So if, for example, if there is a certain limit which you have in your account, then the positions could be taken only to the size of the limit and the margin which you have deposited in that account, and it will not be calculated post or the end of the day. The fifth, and again a very interesting kind of consultation which is there, is to increase the minimum contract size. Now we all know that the index strikes or the index size was around 5 lakhs to 7 lakhs on a broader basis. So if you calculate 25,000 Nifty and with the lot size, the current size was around 6.5 odd lakhs. Now that will gradually be increased to 15 to 20 lakhs, and then beyond the next 6 months, the average size would be 20 to 30 lakhs. This, of course, is the aim of doing this is to curb the higher amount of risk, because there has been higher amount of activity because of the low margin requirements from an index futures perspective, and that I think would probably be curtailed significantly. And the sixth portion is that you have to rationalize weekly index products. Now we all know that there has been so many index expiries which happen on a weekly basis, right from Monday towards Friday. Now there is no need of having so many number of weekly index expiries on that on every particular week. So that has to be curtailed and the number has to be brought down, even though there is no specific mandate or the indication is given as to which indices would be impacted in this particular consultation proposal. And the last and the most important is that there has to be an increase in the margin near the contract expiry. Now the key highlight over here is that SEBI consultation paper says that the volatility which happens on the expiry day or very close to the expiry day is more speculative, and it is not driven by market forces as such. And to bring that down, what you need to do is have a volatile kind of a margin. So the more you move closer to the expiry, the margin actually has to increase rather than remaining normal. So this would also help curb the speculative activity. These are the proposals by SEBI in the consultation paper mentioned.
Absolutely. Looks like you had a very long evening, Kunal, isn't it? The fact that you went through the entire consultation paper. But thank you so much for actually breaking down for all of our viewers, for explaining what the proposals are and what they likely are aimed at. Thank you so much for the exhaustive and yet detailed explainer on the SEBI consultation paper on F&O. Thank you so much, Kunal. But on that note, we come to an end of this edition of Buy Now Sell Now. So thank you viewers for tuning in. It's a goodbye from Srishti, myself and the team that put the show together. Thank you so much for watching.